Welcome to today's lesson. Welcome to today's lesson. So today I'll just be taking you on Forex. I know there's a lot of you guys that are finding it difficult. Like you did not go through the basics, the basic explanation. They kind of explained it to you in a very, let's say, in a very quick way due to everything going on social media, so they want to keep up to time. But this is a well detailed explanation on Forex, and you're going to be understanding Forex more, and you're going to be understanding the currencies, the deeper things that they won't tell you in Forex. So this is what we are going to be treating today. Um, Without wasting much of our time, let's start with what is Forex actually. So Forex means foreign exchange market, right? Foreign exchange. It means when there is exchange of two currencies to from one person to another, or from one individual to another. For example, let's say I needed to pay for something in dollars, right? Let's say I want to buy something online and I need to pay for it in dollars. What do? I I buy the dollars using what, the naira. So I give them the naira and I collect the dollars. So that's just simply what foreign forex is: foreign exchange of foreign currencies. Now we make money through this because there's a lot of you know movements in this buying and selling of different currencies. So with this, price fluctuates. Are you getting me? So price becomes different. You will see today, you hear naira is 1,600 per dollar, and then later on here naira is 1,550 per dollar. So due to there are a lot of exchanges, so price will what, fluctuate. Once there is demand and supply, price will always fluctuate due to the increase and decrease in demand and supply. So so that's just basically why forex prices decrease, and that's why you see all the time forex, you see a chart and forex market will just be going up and down. So that's just basically it. And we make money off these small movements. Are you getting me? So what we do in forex is that once price change, we make money. For example, if you are changing your money, maybe you want to travel to US and you change 1,005 per dollar, and let's say you exchange $100. Are you getting me? So it means you'll be needing about 150k in order to complete 1,005, right? Yeah, I think 150k. Now, so 150k, we have 150k. And now let us say after traveling to US, you come back. If you still want to change that, maybe within that period of time dollar now move to 1,004. Are you getting me? Per dollar. So it means if you want to exchange it, you'll be getting 140k. So it means you've made loss, right, within the short period of time that you were in what, United States. So that's just simply how forex work. Hope you get me now. So that's just basically what is forex. Now in forex market we have something called liquidity. Liquidity just mean money. Now because there are many buyers and many sellers, like I said, exchange, anything dealing with money, everybody in the world uses money. So because there's a lot of buyers and there's a lot of sellers, people are always making international transactions every day. So there's more money in the market. So this is the biggest liquid market ever. It means there's buyers and there's sellers, and they are all competing for different price. I hope you understand. So sometimes, that's why most times, forex, you always see the chart go up or go down. So that's just it, because there's always buyers and sellers in the market. Now, so why is it that people trade forex? Why is it that we don't just go out and just start selling popcorn and selling amala, or selling, just sell any commodity that we like? Why is it that we like trading forex? Now it's very very simple. The reason is because forex never sleeps. It can never sleep. It's open 24 hours, 24/5. Now because the banks, hope you know that banks to trade forex. Are you getting me? Because they always exchange money to you. Are you getting me? If you need USD, you have to what, go to the bank to go and collect USD. So it means they're also exchanging foreign currency. That's foreign exchange. So they do forex too, right? So I was saying something. Yes. So different banks in different countries open at different time. So it might be that the time that bank A in Nigeria is opening, like the Central Bank of Nigeria is opening around 8 o'clock to maybe 4 o'clock. 8 o'clock to 4 o'clock. Now the same time, maybe it's that 4 o'clock that another bank maybe in New York will start opening, or it's the same time that another bank in South Africa will start opening. So due to different time zones, all these time zones are interconnected. Are you getting? That's why it never sleeps. So even when one bank closes, that might be the beginning of another bank, so it does not close. The only time it closes on Saturday and on Sunday. Why? Because workers need to what, rest. So as simple as that. So the next thing we are going to be talking about is leverage. Yeah, no, sorry, we long and short it. Now what is mean of long? Long means buy, short means sell. So if you want to really know long, just remember, buy. Once you buy, you expect something to go up, right? You expect the value to go up. So up means long means what, buy, and then short means what, sell. Now for forex traders on a normal market, like the one likes of Oshodi, Yanosolo, all those places, you only make money while selling. There's no way you can buy a product and then you tell me that you are making money while buying it. You can buy it and keep it and then the value grow, but you don't make money when you buy it. Are you getting me? But in forex you make money both buying and what, selling. That is long and short. We make money at any time. And then low transaction cost. Yes, this is also very very important. For example, in the forex market, this is low transaction cost. Now for example, in the forex market, there's what we call there's what we pay. There's this fee we pay, after placing order in the market, after buying or after selling. They will pay a small fee. The fee is not even it's not big. It's not even big at all. Unlike the normal markets whereby you have like 10, maybe you have a shop like this, and then they'll tell you to pay water fee. They'll tell you to pay electricity bill. They'll tell you to pay, which other one again? Which other one do we know? They'll tell you to pay, ajo, all those little things. They'll tell you to pay contribution. So all those things all together are what we don't pay the forex market. No, we don't pay them at all. You only pay small fee. That is why forex market is good. Low transaction cost. And then leverage. Yes, you need big money to enter the market, but because there's something we call leverage, there are people we call brokers that gives us leverage. It means the same buying power of somebody that have 1 million naira that is entering what, the market. So it means anybody can enter the market with a very low amount of money. They'll add more leverage for you, like more money for you, in order to enter the market. So you don't need to worry, I have only $10, I have only $30, I have only $100. How would I enter the market? If there are big players in the market, so you don't need all that at all. So they will give you what, leverage. You don't need to worry about that. Now high liquidity too. High liquidity also means there are a lot of buyers and a lot of sellers, and there's more money in what, circulation. There's more money, so liquidity just means money. Now the next one says accessibility. Be it that you are a tailor, you are a you are a bus conductor, anybody can access the what market, and you can even just deposit $25 and then trade forex to become what a millionaire. But you have to know what you are what doing. Now, who trade forex? It's just simple. Forex is just traded by people who we call forex trader. And who are these forex trader? I'm going to explain it to you later on, but not now, because this particular one is a section on its own. I'm going to explain it to you. People that participate in the market, they call them market participants. So I'm going to explain to you. So when can you trade forex? Yeah, you can trade forex 24 hours, 5 days, but you don't just trade anyhow. Even if you have the liberty to trade within that period of time, we can't just trade anyhow. So what we do is that we wait for a certain particular amount of time. We wait for a particular time, and then we place trades. For example, if you're trading gold moves very well from around 12 o'clock down to 6 o'clock. So by that time you can be able to trade gold. So we are talking about when to trade now. So what I'll just tell you is that don't just don't just the only time you should trade, the only time you should enter the market is around 12 to 4. That's when you start looking for opportunities to buy, opportunities to sell. Do not, I repeat, do not trade before these times, because you may have issues, and it depends on the currency also that you are trading. But do not trade. Make sure that the currency that you are trading should be currency that is more volatile, that moves very well on around 12 o'clock Nigerian time. I'm talking about Nigerian time now. 12 o'clock Nigerian time to what 4 o'clock 6 o'clock Nigerian time. So aside from that, there's basically nothing here. The time zone, so these are the time zone. We have the London section, New York section, and Sydney sections open around 4 p.m. to 1 a.m. Eastern time. Tokyo section, that is if you are trading anything Japanese yen, any Asian currency, their section opens around 6 to 3. And you can just go through all these things. You can just take a screenshot and go through all these things, but I would advise you to take trades only around 12 p.m. Nigerian time, that's Western time, and also till 6 p.m. Western time. That is if you're a day trader. So I believe that's all. Now, who participates in the market? That's when we start to talk about structures of forex market. Now, these are the only people who participate in forex market. These people, they are the ones that move the market. So the first one is the central bank. They are the baba of all banks. When it comes to each countries, they are the baba of all banks. And then the next one is the major commercial bank. I'm just giving instance here in Nigeria. For example, the Access Bank, the UBA Bank, all those normal banks that you see on the streets. Are you getting me? That are not central bank. And then we have maybe the investment bank, the corporation. The investment bank are those banks that allows you to save your money, and then they'll give you interest, all this kind of stuff. And then also corporation, these people actually help you to change your money from dollar to naira, and they also trade the forex market, and they are also part of the movers of the market. They are the one that move it very well. Now, so also the hedge fund guys and the speculators, the pension, all these things that relates to money, they are the people who moves the market. And also the brokers. But brokers are people who helps you place trade in the market. For example, we have Xness, we have OptaFX. You must have seen those ads popping up on your screen. So those are the market participants. Now, but there's something I want to show you. Now, these are the hierarchy of people that move the market. The first one is the major banks. That is the central bank. central bank. These people, they can fall the market and rise the market at any given time. So what we do is that we follow them to trade. We don't trade against them. We follow them to what? Trade. They are the one that show us the movement of the market. So if the market is moving downwards, then we follow the trend. We follow them to trade. And then we have the brokerage firm, that is the people that help us place order in the market. And also we have the smaller banks. These ones are people, like the commercial banks and all those small banks and microfinance bank. And then we also have the hedge funds bank. The hedge funds, those people are people who manage people money, like all these big banks, all these big companies. There are people who trade forex for them so that they can have more money to do other things. So these are the hedge fund guys. And then we now have the retail traders. So these people, we are the retail traders, the people who trade individually, that don't have big money to move the market. So these are the retail traders. So that's basically all. These just basically all. So next time we are going to be talking about something different. We're going to be talking about something different. That's when we start talking about the currency pairs that we have, ET. So see you next time in the next video. And don't forget to like, subscribe. The more you do that, the more you encourage me to post more videos. Remember, this is not an advertised video, or we are not sponsoring anything. It's just something free that everybody can use to learn something broken down into pieces. Before we even start trading, it will take a very long while. You have to just complete the section or the series so that you could understand, not just jump into the forex market like that and then make mistake that other people are making. So the question is, are you ready to learn? So if you are ready to learn, subscribe, and I'll see you next time.